Today, we're joined by Steve Selengut, an expert in achieving income independence. He will share invaluable insights on what it takes to build financial freedom, especially for those over 50. He'll walk us through his 6 principles of investing and give you clear guidance on where to focus your efforts as you prepare for retirement. You're listening to the Wealthy After 40 podcast, helping you navigate retirement by learning to be your best financial advisor. Welcome to Wealthy After 40, where I help you turn retirement uncertainty into a clear, actionable plan. If you're thinking about retirement but feel unsure whether it's even possible, I understand. The gap between where you are now and where you want to be can feel overwhelming, but it doesn't have to. Hi, I'm Daylene Higgins, founder of Elevate Finances and your personal financial coach. Having retired at the age of 50 and have enjoyed over 2 years of retirement bliss, I'm here to help you create your retirement dream and make it a reality. No more wondering, no more guessing, just taking action and building a future for yourself. Join me each week as I guide you through essential topics such as budgeting, cash flow, lifestyle planning, debt and savings, insurance, Medicare, and Social Security. Together, we'll build a strategy to help you achieve the retirement you've always desired. It's time to shift from uncertain to unstoppable and make your retirement dreams a reality. Hey listeners, before we dive into today's interview, I want to share something with you that can help take the guesswork out of retirement planning. I've created a free checklist to guide you step by step based on how close you are to retirement. It highlights exactly where to focus your attention so you can confidently prepare for your future one step at a time. Download this checklist now down in the show notes below or on my website, elevatefinances.us/retire now, and take the first step toward retiring with clarity and confidence. Welcome to the podcast, Steve. I'm so excited to chat with you today to help listeners gain an understanding about retirement, spending money, all of the things. But before we dive into that, tell us a little bit about yourself and what sparks your passion.
What sparks my passion? I really have grown up in an investment orientated community. You know, when I was young, my dad had a business. He was a real estate developer, builder, and other things. He had a very big emphasis on having multiple streams of income. So if it wasn't a good time for building houses, no demand, at least he had the rents from the ones previous, and he had interest coming in and mortgage payments from the people he had sold things to. And he had other businesses like insurance and a lumberyard even for builders and stuff. So he had a vertically integrated operation. I learned what it was after I went to college and took a couple courses. But his emphasis was always on income, even when I was a kid, when I was working part-time jobs or jobs in between semesters in college and so on. He always took a piece of it and said he was putting it away and investing it for me. And then all of a sudden at age 25, I got it all back. So I've always been an investor. I've always been income focused. And I've always really gotten a kick out of the trading mentality where when I first got the portfolio, I looked at all the charts and saw how a company like IBM or Exxon, Esso at the time, would go up and down and up and down and up and down. And I came up with the idea, and they're all dividend payers. They were all big board companies. And I said, what if every time one of them went down, you bought it, and then, it went up 10%, you sold it and did it again. And I finally found, or the stockbroker that I put I actually had stock certificates. You've never seen a stock certificate?
No, I have not.
No, your generation never seen. We used to get stock certificates from the companies. Do that. So anyway, I'd studied all this movement and I'd figured, If I buy Shell oil today and it goes up 10%, why? And I see the chart, it's done that 100 times before, and every time it's gone back down again, and then it's gone up again, and each time it's a higher low and a higher high. I'm just going to put a target on every one of these things, and when it gets there, I'm going to sell it and do it over again. In the space of 6 or 7 years, I was commuting to New York from North Jersey, working for a life insurance company. And within five, within when I was 25, in 7 or 8 years, I was making 5 times my salary trading and from the dividends and the income I was receiving when I was taking profits. So I said, well, I don't need these suits anymore. I certainly don't need to get on that bus every morning and go to the city. So I told my wife that I was leaving it and starting a new business. And fortunately, she was employed, making a good income herself, and she was as a paralegal. So I started. I found two guys, two of my friends. They said they'd give me money. I could manage for them because I showed them my results over the years and how I'd grown my portfolio to a significant level. And oh yeah, we were interested in that, and it was that simple. The first two clients were very easy. The next few, not so much because you had to show people your track record and do this and do that and push the clock forward another 44 years. And in 2023, I had 110 million of other people's money under management, and I was making a significant amount of money on that. And I had a portfolio that was telling me, hey, I'm making you more money than you're making managing other people's money. It's time to sell. And that's what we did. That's my story. I've always been in the financial arena and I've been supervised by all the appropriate entities. And I've always felt really, really good about looking at somebody's portfolio and saying to them, I can help you make more money than that. And not with taking on additional risks, not with any fly by night speculative type things, just with good quality securities that generate more income
Yeah.
than those that you have now. I sold the business and now I'm an income coach. I call myself an income independence coach.
What does income independence mean?
Income, when you can sit back and say, I really don't care if the market crashes, if there's a big correction. I don't care if interest rates go up. It will not have a negative impact on the income that my portfolio is producing for me. And now I can go a little further than that and say, in fact, if either of those things happen, it'll help me grow my income and grow my working capital even faster. So that when I hear about the market going up and down, I don't have agita either way. I don't, I know that if it goes up, I'm going to have profits to take. I know if it goes down, I'm going to have opportunities to buy things cheaper. And that's what it's all about, really. And to build an income portfolio on top of that, you're focused on the income you're generating. You recognize that there are two distinct streams of income that you can develop. The one is called base income. That's what you're going to get. The market just stayed the same for 20 years. The income produced would be the same because dividends and distributions are the same, theoretically. So if nothing happened, you had your base income. In many circumstances, the market gives you the opportunity to capitalize on the gains that it produces. Most people don't do that. Most people want, oh man, I'm rich. And then, a year and a half later when the market goes, oh no, I'm not rich anymore. Whereas an income focused investor has taken those profits, turned it into more capital, producing more income, and now he's got an opportunity to do it all over again.
I like that. So, as a coach, you pivoted. Right? You're not
Yes.
managing, you're not an advisor. As a
Right.
coach, what does that look like? What does that look like for somebody to work with you?
I look at three things. First they have to know a little about me, about my strategy. My strategy is totally different from most that they know of. Not many, no professionals that I know of are focused on generating income for their clients. They get paid on AUM. Their bosses get paid on AUM. They want them to grow the amount under management. And not the income, it doesn't work that way with an income-based portfolio. So what I look at and what I talk to people about is we'll look at your portfolios and we'll look at the quality of what you own. We'll look at how well diversified you are. We'll look at the income you're producing, and we'll see if you've been taking your profits or not. And by looking at a portfolio, those things are all pretty easy to judge. And with the experience I've had in both the stock market, the bond market, and now what we call the closed-end fund market. It's a fund different from ETFs and mutual funds, which we can get into later. So I look at what they have. I ask them to come with any questions they have of me after reading the book or what my background is. And most people will come to an investment person and at least have an idea who he is and what he does. They've watched some podcasts or they've read the book or they've read the book reviews. They've done something to check me out before they're going to give me, a couple $100 to look at their portfolio. So they have questions. So we have a portfolio review. I answer all their questions. And then if they're convinced that they want to transition from a 3% income portfolio, which is probably a little more than most people are making, to an 8, 9, 10% area, then we come up with a plan. We're going to do this, and this. And if you get all that done, we'll talk again, and then we'll do that, and that, and then you'll be on your own doing it yourself. That's how it goes.
I like that. Who would be an ideal client for you?
I really think that, well, I got started investing for income when I was 25. I don't think it's a bad idea. I mean, young people should certainly have more of an exposure in the stock market because that's where real growth is going to be more likely to occur faster. However, they have to understand that they have to take their profits in order to secure that. So they need to they need to have targets and then they can reinvest. But as people get older or wealthier, once you reach a certain plateau, I don't know how many millions that is. When I was young, a million was probably that plateau. You didn't need much more than that in the 70s, Today, I don't think people think of $1 million as enough to retire on. Not if you want to see the world, certainly.
Yeah.
Yeah. So, but once you get to that point, that's where you say, wait a minute. I don't have to play this risk game anymore. I don't have to try to pick the next Microsoft because, I've got plenty of income and I don't have to do that. I've got this. So it could be almost anybody. The majority of my clients are over 50. I mean, I've had a couple, I haven't had many all in their 30s for sure, or lower, but but in their 40s, I've had a bunch. There are a lot of people out there who are really in pretty good financial condition, even in their 40s.
Good. That's good to hear. Yeah. So my listeners are mainly, we do have a few young ones. They're mainly over 40. And I know there's probably a spread of some of them have saved quite a bit and others
I know.
I'm late to the game. So do you have
Well,
any advice for them?
oh, yeah. I was just going to spit it out there while you were talking. I was ready to go. I think the first thing they should do, and this is any of them, whether they have a professional helping them or not, and not saying anything about anyone. It's a direction and it's a mindset. If they look at their portfolio and it's not generating more than 3 or 4%, they should start scratching their heads because at that age, they've already heard about the 4% rule. 4% rule is a very, very good rule. How the financial community helps you do it or get there is really kind of not quite right. You're expected to sell securities to take your 4%. And I don't know if the 4% includes their fee or not, but it should. Mm-hmm. Okay. Mm-hmm. So if your portfolio is generating less than 3% and you're paying 1.5% to a financial advisor, 3% of what you're taking from your portfolio has to be produced by selling stuff. So that's why they say 4%, you've got a 20-year lifetime expectation. It's like an annuity. They're making you an annuity. When you get to 85, which I'm getting there, which once you get to 85, your portfolio will just be about gone. You know, that's the principle. And, in the bad years, if you, in order to get 4%, you got to sell even more. In the good years, you don't have to, you still have to sell, but you may not be taking losses of capital to do it. So it all evens out in the end and you're going to make it. I mean, everybody's heard of dividend stock investing, right? There have to be more than 100 individual stocks that pay more than 4% in dividends. There are such things as REITs, BDCs, business development corps, master limited partnerships. There are even ETFs and mutual funds that pay much more than 4%. And then, of course, there are closed end funds, which are the best in my estimation because their sole purpose in life is to produce income for their share owners. And the reason for that is they're trust vehicles and they have to pay 95% of their net income to their shareholders. So you can't expect them to grow. They're not going to, you're not going to pick a winner and it's going to go and multiply 300 or 400%. That's not going to happen, but it's going to pay you. And right now, the ones that are purely income securities, bonds, mortgages, stuff like that, are paying an average of 10%. And the equity ones, the stock ones in the stock market are paying 9%. So that's the difference. They're not going to grow in price so much. They'll go up or down depending on the expected direction of interest rates and a little bit of the stock market. So that's what I'd say to them. If you are not making at least 4% in your pocket or potentially in your pocket dividends, you need to look at what you're doing and tell your guy, your lady, to start making more income for you. You can buy him a copy of my book. After all, he gets all done poo-pooing this and talking about leverage and return of capital and all these other things. Just point out in the long run, I'm getting 9% or 10% on my money, and it's going to cover your 4. And I want you to think about doing it that way. So that's the first thing I think anybody in your age group should be doing. How much am I making now? Why am I not making more income?
Now, let's talk about your book before we run
Okay.
out of time. So, Retirement Money Secrets is your latest book. This is your second book.
Yeah.
Yeah, tell us about it. Why should somebody
Second,
read?
this book talks about basically 6 principles of investing. I mentioned them a little bit, quality, how to determine what the quality is, and making yourself a set of selection rules that you're not going to violate. Even if somebody gives you, hey, this one's really a good one, that's not good enough. Quality requirements. Everything you own has to pay some kind of income, be higher. Diversification. Nothing you own should ever be more than 5% of your portfolio. I have a rather large portfolio. I don't have anything that's as much as 2% of my portfolio. I go to sleep at night and I say, well, if any one of these securities go to zero, I'm not even notice it in my account balance the next day. The fourth thing, and the most important thing that most people totally fail to do because they tend to fall in love with the real nice ones that produce a high profit level, they don't take their profits. And then when they start going down, it's going back up. It's going back up. So taking the profits is number 4. That's the risk. Those are the 4 great risk minimizers. The 2 other things we deal with are the fact that there is a market cycle, not only a market cycle, but sectors have cycles, interest rates, the economy, and everything else. And that's not just an upward machine. The stock market is a market and it's going to go up and down. That's what markets do. Somebody offers one price. Somebody said, no, I don't want to pay that. I want to give you this. All right, I'll take it. And depending on which way that supply and demand is going, that's what takes the prices. They don't just go straight up. So you have to have an approach that allows you to take advantage of that knowledge. You can figure out, it's easy to know where you are in the market cycle. I mean, it's easy to know right now we're within this much of the highest level the stock market has ever been, but we're still this much away from the lowest of interest rates have ever been. So interest rate sensitive prices are down still from their 5-year highs, while the stock market prices are very close to their 5-year highs. Good time to take profits here, good time to buy here, that type of thing. So you know where you are, you don't know what's going to happen next, unfortunately. And nobody knows what's going to happen next. And no matter how much tech you look at or listen to or hear, nobody knows what's going to happen next. The final one, the sixth thing that is really covered in there, is it's a mindset thing of getting yourself to focus on the income generated by your assets as opposed to their market value. And it's just like you would do with your job. How long are you going to let your boss pat you on your back? Oh, you're doing a great job. You want him to say, here's a $25,000 bonus because you're doing so good. It's the income that pays the bills, not the market value of your securities. I look at securities, since I own so many different ones in this closed-end fund universes that I've created. All of these things have met my quality standards and they pay big, nice income and all that. But I look at them like they're the merchandise in a department store. In a department store, you set prices, you have a markup on your inventory. The last thing you want to see is the value of your inventory rising. That means you don't have any sales. You're not making any money. So I look at my portfolio in exactly the same way. Every one of these things has a purpose. Even though it's got one purpose, it's paying me a lot of money in dividends. Its second purpose, it's potentially that I can make profits on it by selling it in my store. So somebody wants to pay my markup, which is 5%, I'll take it. I'll buy something else, put it back on the shelf. And I do that over and over and over with the same merchandise, just like a store. And I think if you can take that approach and looking at your portfolio and thinking of it in that manner, it'll make it a lot easier for you to focus on income and to appreciate the market cycle, because it's the market cycle that gives you those profit opportunities and the opportunity to replace your inventory at a lower level.
I like that view of looking at it with the ups and downs, ebbs and flows, right? That's the way life is. That's the way the market is, and learning to ride it. Before we finish up, what is one action step listeners could do today to start making progress, advancements with their portfolio?
I think we've gotten into the first thing to do is take a look at it. Do you have any positions that are bigger than 5% of the total wealth you have? Do you have a lot of unrealized profits? How much of that is profit that you haven't taken? And if the market continues to go down like it has the last 3 days, let's say it does that for the next 50 days, all that profit's going to disappear. So look at things like that.
Good advice. All right, Steve, where can people connect with you? Where can they get your book and learn more?
The book is available at Amazon and all the other places too, from draft to digital to Barnes and Noble, everything. And it's in all 4 varieties: ebook, paperback, hardcover, and audiobook available. Amazon, we've sold over 4,000 copies if you count the audiobook already. It has all my contact information in it. The name of my website is theincomecoach.net.
Perfect. We'll have all the links down in the show notes. So listeners, go check that out, especially if you're wanting to get an income coach to support you, especially if you're worried about maybe working with a financial advisor or you're questioning maybe what's going on. Give him a reach out and connect with him. Thank you, Steve, for being here and sharing your thoughts.
My pleasure. My pleasure.
Listeners, we'll see you next week.
Okay.
Thanks for listening. Each week, my goal is to help you get one step closer to retirement so you can be excited for that big day instead of stressed and just hoping it will work out. If today's episode got you thinking about your retirement plans and you're wondering if you're on the right track, I'd love to connect. Let's explore how you can confidently design the retirement you've always dreamed of by booking your free retirement vision session today. In this 30-minute call, we'll clarify your cash flow, what's coming in, going out, explore or refine your retirement dreams, and make sure you're not missing any key areas that may impact or delay you in reaching your retirement goal. Book your call using the link in the show notes below. Don't wait to get clarity. Take that first step toward your dream retirement today.